Has anybody in here wrestled with that? What's it mean?
How much to, how much money you have to contribute to fixed costs.
I mean, that is a long way of saying it. It's how much you have to cover your fixed costs. I mean, but to me, I just think of it very simply as, it just describes the calculation of revenue minus variable costs. Same as income. What's income mean? Philosophically, deeply, richly. Well, it doesn't really, does it? It just describes the calculation, revenue minus expenses. And so, anyway, fixed overhead, fixed selling and administrative expenses. Do you all feel okay? Taylor, are you okay with me kind of writing those down? Tony, how about you? You okay with, okay, how's that? You were looking at a spot in space. David, you got a calculation for me? $18,000 operating income. Piece of cake, walk in the park, easy as falling off a log. TJ, what?
I was talking about the absorption.
What were you talking about? Tell me, please.
Well, she asked if I got the same numbers for the absorption rate. I said, yeah, but I think it's different because of that calculation. So I think it's
Correct on both statements, I do believe. So, because if you got the same numbers, if you've worked ahead and have the same numbers for the same years, for all 3 years as income, you're wrong. Okay? So, because my first question for everybody is, I'm going to ask it right now. I want a number. I want a number, Nick. What is income going to be year one, absorption, costing, income statement format? I want a number. Should be same, $9,000. That's where this comes in. Look it up here. Yeah, bingo, bingo, bingo. That's why Nick can say that with great assurance, because of this information right here, okay? So that's why year one will be the same. It is $9,000. We know. Notice we were able to calculate income without preparing an income statement. Right? That seems, I mean, there's a question on the final where I ask you to calculate income and I don't give you enough information to create the statement. But you have enough information to create the other statement and then kind of work into it using this formula and the information in the problem. And invariably, at least once a year, a student will come up to me, but Dr. Fessler, this problem isn't right because you haven't given us enough information. Yes, we have. Yes, I have. It's there. You just got to be sneaky about it. Right, Tony? Okay. Jackie, year two, what will income be? She thinks that's a very good question, and I agree. You don't know? Not at all? You have any thoughts on how we might begin to think about it? Eric? Not Eric. I was actually looking at Alex. Alex? No, it's 2 syllables. Kind of short, 4 letters. Same number of letters. And Erica is kind of happier now.
3,000?
Huh?
Is it 3,000?
How'd you get there? I have no idea.
Because the fixed is going to be different.
Oh, actually, production is constant, right, every year? So fixed overhead per unit is the same every year, which is why this works.
Right.
What is fixed overhead per unit? How much? $3? How'd you calculate that?
I took the 15,000 divided by 5,000 units produced.
15,000 divided by 5,000 units produced, $3. You see that, Char? Do you agree? You like that number? But you see how she got it. So that is fixed overhead per unit. And very important here, do you use units produced or units sold? Here we use units produced. To calculate fixed overhead per unit, we have to use units produced. And that is indeed $3. Jackie, how much did inventory change in year 2? 1,000. You know, and I can do that math without even having a calculator. What is the difference in income going to be? $3,000. How exciting. Nathan, isn't this exciting? Absolutely. So now how do we use that information? How do we use that $3,000? Let's look. Year 2 was production or sales higher in year 2? Production was higher. So which is going to be higher, absorption income or variable costing income? Absorption is going to be higher than variable by how much? $3,000. So what is 0 plus $3,000? $3,000. And see how easy that was. But now you can do it. What doesn't make sense about it? Victoria?
I just don't like it.
Oh, we'll practice. It'll be on the final.
But would you ever make us like write it all out instead of doing it that way to find it? Because it's
Sure.
Well, I don't know how to do that. That's where the problem is.
You don't know how to do
I don't know
what?
where the hell you got 3,000 besides you did 1,000 times 3. That doesn't tell me where it comes from.
Well, do you know where the 1,000 came from?
Yes.
Do you know where the $3 came from?
Doesn't explain it, but yes.
Okay, and so this number is the difference in income.
I get that, but like, how are you going to break it out to show that it's...
Well, you wait and see, and we'll get there. We'll get there. Adam, year 3, what's income going to be?
$15,000.
That's correct. But I'm doing this just to illustrate that you can calculate these numbers without doing the income statement. And absolutely, we're going to do the income statement so you can see why it's different and how it worked out different. Yes, sir.
I have a question.
Please.
Well, in this example, the net income overall comes out to balance between them.
Yes.
Will that always happen whenever inventory goes back down to 0?
Not necessarily. It just happens to be that the changes in inventory were symmetrical, right? Because it went down. You know, the inventory went up by 1,000 units in year 2, and it came down again by. So it wouldn't necessarily have to. Yes, ma'am.
so the change in inventory isn't from year to year, but just from what's sold to what's produced.
Correct. Although that's an outstanding question. She asked about changes in inventory from year to year versus year produced. When production is constant, it's just within the year. It gets more complicated, and you have to assume FIFO if production is at different levels each year, but fixed overhead is the same. What happens is fixed overhead per unit is different from year to year. And so in year 3,